Yeah, so if you've been following this podcast, you've known that we've been covering Beyond Meat. And I think one thing that I've been trying to be focused on with Beyond Meat is two things. One, the plant based meat industry is taking a hit. I don't think this is a stand in though for plant based eating taking a hit. I actually think it's going to be more prevalent. You look at the stuff with Tyson and whatnot, meat's getting more expensive. I do think that our dynamics of this are going to change. That being said, there was reporting that Beyond Meat was going bankrupt. It was then reported that it wasn't. There's been a lot of pressure from there's theories that like even when Beyond Meat was starting, there was like ads taken out by big meat groups saying like there's been a lot of behind the scenes industry manipulation. But it kind of feels like just this manipulation has taken its toll, and the poor running of Beyond Meat has taken its toll. You often talk about, Justin, that if a restaurant's failing, should it be a business? If they're not operating smartly, should they be a business? Well, Beyond Meat had a pretty full day the other day as they saw their largest single day drop in stock valuation. So basically, what caused this was a debt swap. And what this refers to is the exchange of a company's debt claims, their bonds, convertible notes for something else, which is often equity or new debt with different terms. The idea is to relieve pressure on cash flows and reduce debt burdens by converting part or all of what the company owes into ownership stakes or restructured obligations. So when this news came out, they sank 48% to $1.03 per share, basically making it almost a penny stock. They had already fallen 47% year over date through that year period. And based on their latest results, the company is said to expected to issue 316 million new shares. And this plan, which was disclosed in September and drove down their shares, aims to reduce leverage. So basically, they're issuing these shares to kind of get out of the debt that they owe. So if all holders to decide to convert their notes, they would own 88% of the stock, according to an earlier filing. So the pros of this: it reduces required cash outflows for debt payments, it extends maturities and eases liquidity pressure, and it gives the company a chance to reorganize and focus on core operations. Cons: severe dilution to existing shareholders that actually own the stock, negative market reaction as you've seen because they're losing investor confidence, and it doesn't guarantee operational turnaround. So in this case, the shock and market backlash have made the swap feel more like a surrender to trying to pay off the debt rather than a strategic move. And while they may have avoided failure now, they're like on even more pressure now to prove to remaining shareholders what they want, like what they can do. So that being said, they basically, from my understanding, tried to restructure their debt by converting it to shares. It has backfired tremendously, and now they are suffering. So again, yes, plant-based proteins and possible Beyond Meat, they are struggling in a certain sense. I think this is different from away from plant-based dining. I will also say though, in disclosure, I do work in plant-based dining, so I know these trends. But I will say that Beyond Meat has operated as a company that has not been smartly operated with. They kind of took off. They were very leveraged in debt to begin with, and now you're kind of seeing those decisions and the lack of their ability to kind of recoup on that debt come to fruition. Your thoughts?
So there's a lot of reasons why these things happen. I don't think we can point our finger at one single one. We've talked about the money that they've raised. We've talked about the product that they have. We talked about industry trends that have
Lack
kind
of
of
profitability.
yeah, consumer trends that have kind of like risen in popularity, and then because of those becoming popular, i.e., lack of seed oils, lack of processing in foods, and more of a like quote unquote return to what our ancestors ate. And you look at the back of a package of Beyond Meat and you're like, oh my God, I can't pronounce, like this laundry list of ingredients. And none of the quote unquote health influencers who, like a vast majority of consumers follow are going to point to a product like Beyond Meat's offerings and say, yeah, this is what I would recommend eating, even though it aligns with some of these other things that are rising in popularity, like plant based eating, but it is often in another form. Do you know what I mean? Like it takes the form of, like a meatless Monday, where I think you and I have also covered stories where you will actually just eat a bunch of vegetables and starches and legumes and like all of these other things that you're not even going to try to imitate quote unquote meat in some of these practices. And also, some of these other like ancestral eating things like go straight the other direction. It's like just carnivore. Do you know what I mean? Like the consumers are literally saying, I only eat beef. And so it's like there's a conversation I had this week with another friend of mine. He is much more into investing than I am. And him and I were having a conversation about, he was like, I think Beyond Meat is like, I'm kind of like trying to calculate, like, is Beyond Meat a buy on this like 47% down day on their stock? Because again, you look at the chart and it's just like abysmally bad. And the thing that I brought up as a kind of counterpoint to his was, do you know the company Carvana? So it's like they had a rising from the ashes story from a Phoenix perspective on their stock price, which was like at the peak of 2021, they reached like $360. They crashed all the way to $4. So that is like 99% down. And then just this past month in September, they reached a new all-time high. That is like a wild run for a stock to have when, people come in and change the business. They're changing all of these variables. They find a way to profitability. They change the team. That I think is like what people think of when they ask these questions of like, should I buy Beyond Meat as a stock right now? And my pushback to this friend of mine was, just look around you from the sense of like cars on the road. If we're looking at Carvana's business. And it's like, is the demand going down for cars? It's like, yeah, you might be able to argue like with Waymos and with like self-driving and like different types of cars, like maybe there's something there. But I think from the general consensus is like, I still drive every day, right? Like you'd probably still drive at least a couple times a week. Like you look at your neighbors and it's like, okay, interesting. And I don't think we can apply that same thinking to like the alternative meat, like trying to be meat companies, from the sense of, if you're going to be plant-based, you're probably going to eat a little bit differently. Like the demand is not there is basically the punchline.
I
And
do
so I
think
don't,
they've also been really killed with this idea of like I think if you are plant based, you're just eating more whole vegetables now
yeah,
rather
yep,
than
yep,
just
yep, exactly.
processed. And
Totally.
I push back on some of like the over ultra processed stuff. Like I do think that
Yep.
kind of gets overridden a little bit. But you're more knowledgeable about what like a sweet potato can do for you or legumes can do for you. You know what I mean?
Totally. And I think like even from a feel good perspective, I think other consumers, haven't eaten that many like plant-based like burger patties or something like that. But like, that like the people who have like straight switched to that as like they're eating that multiple times a week for themselves, they don't feel good after eating, some of these things. And so there's almost like the supply is bad and then the customer experience is bad and then the business is run poorly. And it's like you add all of these variables on top of each other and you're like, I don't necessarily think that this is going to kind of like follow through. And especially with like the way that they've named the company, I think the only, again, like moonshot prediction that I might maybe add here is like if they go into like the lab grown meat sector and like that becomes like the way that they're going to pivot and change, maybe there's something there. But again, I think it's so like broken and convoluted that I don't think that there's a world where they can kind of come back from this. And so, yeah, like it's unfortunate to see.
And the way that the company is structured is just, I mean, it's just a ton of debt and over leverage decisions. So